It is Friday evening, March 27, 2026. We'll be examining the recent market turbulence and analyzing the price action of TQQQ over the last 4 weeks. Let's begin with TQQQ's current status. TQQQ is trading around $38, significantly below last month's $50. That's a dramatic 24% drop in just 1 month. Looking back at the journey, TQQQ hit a prior all-time high of $46.90 on December 16, 2024, before that brutal plunge to just $17.50 on April 7, 2025. The recovery that followed was spectacular, with TQQQ achieving a new all-time high of $60 on October 29, 2025. Since November, we've experienced a roller coaster with 4 notable dips: $45 in November, $49 in December, $50 in January, and $46 in February. Through all of that, TQQQ managed to stay above the SMA 200 green line until February. However, everything changed on March 3 when TQQQ broke below the SMA 200 green line for the first time. Throughout March, TQQQ has been in freefall, dropping all the way to $38 today. Looking at this TQQQ daily chart from Finviz, the situation has deteriorated rapidly. We used to trade between support and resistance lines. However, since March 19, we've been below both the resistance line and the critical SMA 200 support. The current TQQQ status, dropping far below the SMA 200 line, signals that a deeper correction could continue for the next few weeks. Remember, TQQQ is engineered to deliver 3 times the daily returns of QQQ, so understanding the Nasdaq 100's health is absolutely critical. The market showed incredible resilience from April 7, 2025 through October 29, 2025. QQQ surged from $402 on April 7 to a peak of $637 on October 29, 2025. That rally was extraordinary. However, the pattern has completely changed since November 14, 2025. QQQ has now broken below both the SMA 50 purple line and the SMA 200 green line. We're expecting a death cross soon, likely in April. The last time we had a death cross was about 1 year ago in April 2025 when Trump announced a broad package of tariffs. Although the tariff policy was relatively easy to reverse, the current war situation is not easy to reverse. This creates much more uncertainty compared to last year. Currently, QQQ sits at $562, significantly down from $608 last month. The critical questions now are: what will be the bottom price for QQQ? Where will this selling stop? Since QQQ has broken below the SMA 200 green line, let's add the SMA 300 blue line to our analysis. As you can see here, QQQ touched the SMA 300 blue line today. Next week could go either direction. Even if QQQ rebounds from the SMA 300 blue line, it may struggle to reclaim the SMA 200 green line. We saw this exact pattern last year. In mid-March 2025, QQQ bounced from the SMA 300 blue line but couldn't break back above the SMA 200 green line at that time. Then it plunged far below the SMA 300 blue line before finally turning around at $402, which was near the prior all-time high price from November 2021. So we need to monitor whether QQQ can find support around $539 or $502, which are prior all-time high prices from previous cycles. You can also learn from this weekly chart. I'll let you study this weekly chart by yourself to understand the longer-term patterns. My phased investment approach remains straightforward. I deploy small amounts of capital when price drops below the SMA 50 purple line. I preserve a medium allocation for a potential move down toward the SMA 200 green line. And I keep the largest portion ready if price falls decisively below the SMA 200 green line, which is exactly where we are now. I also watch secondary indicators like volume, RSI, and Bollinger Bands to confirm my decisions. Now let's talk about what happened this week. The US stock market endured an absolutely punishing week, with the S&P 500 suffering its longest losing streak since 2022. Oil prices continued surging and the Magnificent Seven tech stocks shed over $300 billion in market capitalization in just 1 week. The Nasdaq bore the brunt of the selling pressure as investors fled high valuation growth stocks. mounting concerns that elevated energy costs would squeeze corporate profit margins while keeping inflation stubbornly high drove the exodus. The tech-heavy index broke through multiple support levels as the Iran-Israel conflict intensified, with West Texas Intermediate crude oil briefly touching $105 per barrel. The Federal Reserve's hawkish commentary on Wednesday further dampened sentiment. Chair Powell indicated that rate cuts would likely be delayed beyond the previously anticipated July timeframe given persistent inflationary pressures from energy markets. QQQ extended its losing streak to 7 consecutive sessions, closing the week well below the critical SMA 200 greenline support. The Magnificent Seven stocks experienced particularly brutal declines. Tesla plummeted 12% on concerns over weakening EV demand in China. Nvidia dropped 8% following reports that major cloud providers were delaying data center expansion plans due to rising electricity costs. Apple, Microsoft, and Alphabet all posted losses exceeding 5% as analysts downgraded earnings estimates citing margin compression. The semiconductor sector mirrored the broader tech weakness, with the SOX index declining 6% for the week as investors questioned whether AI infrastructure spending could maintain its pace. Turning to the economic outlook, the latest GDP Now forecast projects U.S. GDP growth for the first quarter of 2026 at just 2%, significantly down from the 3.1% estimate last month. For comparison, U.S. GDP growth was negative 0.5% contraction in Q1 2025, 3.8% growth in Q2, 4.4% growth in Q3, and 1.4% growth in Q4. The economy is clearly slowing. The CME FedWatch tool now suggests the Federal Reserve will not likely cut interest rates at all in 2026. This is a major shift. Last month, the CME FedWatch tool suggested the Federal Reserve would likely cut rates twice in 2026. Meanwhile, Polymarket shows the perceived probability of a U.S. recession in 2026 has increased from 22% in February to 36% today. The 36% is the highest chance reported in 2026 so far. However, keep in mind that peak recession odds for 2025 hit 66% on Polymarket, yet no recession materialized. The Fear and Greed Index plunged to 10 this month from 43 last month, now registering extreme fear. This is the lowest number in all of 2026. Last year in April 2025, the lowest index reading was 3, so we're approaching those panic levels again. Let's check our portfolio performance. I have added 4 shares of TQQQ since last month. Last month in February, I placed several limit orders to buy TQQQ at $43, $44, $45, and $46. Several weeks later, all those limit orders executed. I'm going to receive a dividend of $47.12 on March 31st. My total capital investment is approximately $20,300. My investment plan remains clear. Since December 2023, I've targeted around $12,000 per year. My goal is to commit a total of $36,000 by the end of November 2026, fulfilling my $12,000 annual investment target for the 3-year period. Currently, I hold 658 shares of TQQQ with an average cost basis of $30.89. My portfolio is valued at approximately $25,300, with total unrealized gains of about $5,000. That translates to a 24% return, dramatically down from the 62% return and $12,500 in unrealized gains I reported last month. That's a painful drop. For a detailed comparison, check out our February 2026 TQQQ update video. I haven't sold any TQQQ shares since 2023 and don't plan to unless I see unmistakable signals of an imminent, severe market crash. My long-term goal remains unwavering: invest $360,000 over 30-plus years to achieve multi-million-dollar portfolio growth. For the full rationale, watch my video Cash vs. SPY vs. QQQ vs. QLD vs. TQQQ, 30-year showdown. My investment methodology rests on 4 core principles. First, monthly investing, consistently committing about $1,000 into TQQQ every month. Second, enhanced dollar cost averaging, or EDCA, buying more aggressively during market downturns like right now and less during peaks. Third, sell before crashes. I'll only exit when I see clear signals of a major market collapse, with full intent to reinvest at substantially lower prices. Fourth, no margin. I strictly avoid all forms of debt to ensure financial security and minimize risk. The financial markets continue evolving rapidly, driven by technological innovation and explosive AI expansion. Our mission is simple: stay laser-focused, maintain discipline, and remain deeply committed to our long-term investment framework. Thank you for joining this month's update. If you found this analysis helpful, please hit the like button, subscribe to the channel, and activate the notification bell so you never miss new content. Your support gives incredible energy and purpose to this challenge. Until the next update, take care, stay disciplined, and happy investing.